You're listening to What's Up Digital Lending, the podcast that explores the exciting world of digital lending. We make a deep dive into the most important issues and talk to the leading minds of the ecosystem.
Hello everybody, my guest today in this episode number 22 is Nicolas Kipp, founder and CEO of Credibur, a startup from Berlin in Germany. My name is Constantin Fabricius and I'm the host of the show. Credibur addresses an exciting growth segment in private debt. Many investors still rely heavily on Excel spreadsheets and sending long emails. This costs time and nerves, and that's really not cool, by the way, for a segment like non-bank digital lending, which is all about efficiency and speed, isn't it? This is where Nicolas comes in with his idea. He wants to bring order to the often chaotic world of digital finance, improve transparency, and strengthen investor confidence. Today, he tells us exactly how he does this. Before we start the show, however, pay attention to the following, please. The content of our podcast is expressly not to be considered investment advice, but is intended solely for your information. We do not assume any liability and will not share any profits. Okay, let's now learn more about the German sense of order when it comes to digital debt. Welcome, Nicolas.
Thanks for having me.
Nicolas, who are you? Please tell us a bit about you and your professional career.
Yeah, sure. My name is Nicolas. I'm 37 years old. I'm currently the founder of Credibur. Can talk about that a bit later. My career started very traditional, I guess, in retail banking, consulting back in the days. And then when that small area of fintech started to emerge, I joined one of the largest buy now pay later players here in Germany as chief risk officer. So I was in charge of machine learning, risk management, finance, all that. After a few years, that company was sold. Buy now pay later had established itself as a new leading category. And I then started my own first venture, Banksware, in embedded lending for SMEs. So I tried to bring the automation that we'd seen in consumer lending to business lending. And then on the side, also was involved quite a lot in local regulation here in Europe and helped different fintech companies establish lending business models.
Thank you very much. Keyword buy now pay later that you have just mentioned. Very important in these times, since we have started with a transposition process in all EU member states. Let's dig a little bit into this. As far as consumers are concerned, this will be treated like a regular consumer loan in the future, which entails comprehensive review by means of sophisticated credit risk management and compliance obligations, even for very small amounts below 200 euros. What effect do you expect this to have on the industry in Europe?
Yeah, I think it's an interesting topic and one where Europe is quite diverse. So I do see quite different models in that space. We call it buy now pay later, but in the end, the underlying consumer behavior is quite different, right? So we have installment products where consumers actually take out a loan to fund the purchase of consumer electronics, for example. And then I think it makes a lot of sense to treat that essentially as a loan because it is one. But then here locally in Germany and to some degree also in neighboring countries, we also have the payment functionality of buy now pay later where we have been using open invoice since forever, since the mail order times or even before, to pay for purchases after 14 to 30, 45 days. And under CCD2, the regulation you just mentioned, this would also be treated as a loan with a lot of implications. And I think the verdict is still out, what the effects will be, but it is definitely a disruption in the industry. In extreme cases, it might lead to the demise of buy now pay later in that function here. But then again, we also do see in the current drafts exceptions and sort of rules that make it possible to still have it while increasing consumer protection. And I think that's the way to go. But let's see, the discussion is ongoing.
Okay, but what growth sweet spots remain with buy now pay later after falling into scope of the Consumer Credit Directive?
That is sort of the very good question after that, I would say. Right now, everyone is focused on survival, not even on growth. I don't really see a lot of growth happening right now in consumer buy now, pay later in Germany and the neighboring countries. For sure, that's different in some other jurisdictions. I think right now growth is coming more from SME and business buy now, pay later, where we see this as an emergent category. Portfolios are growing, new players are still coming up and growing, especially in Eastern Europe. Still a lot of development on the way. So this excites me more. Consumer buy now, pay later, really right now more about survival, and then seeing that still prospering after CCD2, and that's a challenge.
Okay. Thank you very much for this trip to buy now, pay later space. Let's get back on track. After Banksware, you have now founded your second company, this time on your own. Does it feel any different?
Yeah, it does for sure. So Banksware, we were 4 co-founders. Company is still very successful and going strong, and I'm still a committed shareholder. But now with Credibur, I have a strong team, but I'm the sole founder. I have a really good CTO, and now also adding more and more senior leadership to the team. But it is somewhat different. I guess it stems from the issue that this is a different kind of company. The last two, so RatePay and Banksware, they were both lending companies, essentially building bank-like structures, right? Non-bank lending. This is what we are talking about. Now with Credibur, we are a software provider in that space. So it's inherently different. I don't need a CFO, a CTO, a CPO, a CCO, but I can cover a lot of that myself, because in the end, and sort of simplifying a bit, I'm building the software that I always wanted to have. We are trying to automate the debt facilities that I struggled with in the last 2 companies, and then about 12 that I invested into or tried to help along the way.
Okay. Nicolas, please tell us, how did you arrive at the decision to establish Credibur? Tell us a little bit more about the secrets.
Yeah, so maybe starting with what we actually do. So we are super young. We only started last year in 2024. And what we aim to do is automate the reporting, data exchange, and accounting in non-bank private credit transactions. So on the one hand, and obviously the listeners of our podcast here, they are aware of that space, but maybe for anyone else. So on the one hand, we have what we call originators, so companies that issue loans or receivables. So these could be non-bank lenders, but also factoring or leasing companies. And some of them, of course, in the membership of DLA, but also beyond. That goes from the super small buy now, pay later startup to someone like a Mercedes-Benz Leasing would also be a target customer. And then on the other side, you have investors into private credit or into debt portfolios. So banks, credit funds, pension funds, high net worth individuals. And we automate data exchange and reporting and accounting between them. And that is inherently a product that aims to bring trust, because these are fairly large transactions. These are portfolios that go anywhere from 5 million to 5 billion. And there is a lot of risk management needed in these structures. And interesting enough, it's mostly done in Excel. And that was what drove me. I was looking at from two directions. So one was solving issues I always had, and I had set this up in Excel spreadsheets or in custom Snowflake scripts and database queries a lot of times. But then I was also working with banks and investors and seeing how they manage portfolios, and saw that they were doing this in Excel spreadsheets, really moving hundreds of millions and handling large risks and exposures. And that is inherently stupid and not the way to go, right? We see automation across the entire value chain. No one's underwriting consumer loans manually anymore, but everyone's handling these refinancing structures manually. And that shouldn't be that way. So that's why we started building the company.
Okay. Interesting. Thank you. And where does the name Credibur come from?
There's 2 versions to that. One is a elaborate myth around Excalibur and the difficulties of loan management. But the reality is that we were looking for a name that has credit in it and where the domain was available, and the brand rights were also available.
Okay.
So the second one is probably the more truthful one.
Okay, great. Okay, I have understood that you guys are dealing with, in general, with non-bank lenders. And but here now the podcast is dealing with non-bank digital lenders. And let's perhaps focus with my next question on these entities. And, non-bank digital lending involves three parties: the borrower, the fintech lender, and the investor. How exactly do these three benefit from Credibur's solution?
So we really connect and target the fintech lender and the investor. We don't interact directly with the borrowers. Obviously, we process data from them. So very specifically, we track every single loan or receivable in our software and automate the reporting and drawdowns, funding requests between the fintech lender and the investors. And then for the investors, it's portfolio management and risk management. The overall goal is to increase trust, reduce losses, and thus also reduce cost of funding. And that's then where the borrower would eventually feel the benefit of our product, is that their interest rate goes down in the long run, right? If cost of funding go down.
Okay, and in which of the two parties that are relevant for your business do you see the largest growth potential?
We work for both of them. We see the higher need right now with investors because they have traditionally lacked automation and digitalization. They have typically very small tech teams, if they have any. And in recent years, you follow the media as well, right? And there have been quite a lot of prominent defaults. The last couple of weeks, First Brands is sort of on top of our minds, but there have been a few cases like that. Stan, for example, we all remember Greensill, of course, but there have been quite a few that were also not public, also here in Europe, that the community knows, but the media doesn't. So we do feel a lot of nervousness in the investor side, and we do feel a need for better and automatic data tracking and covenant monitoring and portfolio monitoring.
Okay, you have just mentioned First Brands. Just for the audience, this case deals with the insolvent US automotive supplier, and which is largely in the media currently. And let's perhaps drill a little bit deeper at this point. To what extent exactly can Credibur help prevent cases such as the one of First Brands and strengthen trust between originators and creditors?
Yeah, so without going in the exact depth of this case, because a lot are still to be uncovered, there's a few hurdles or a few plain errors that are happening in these transactions. The main risk is really fraud from the fintech lender. So in this case, we have seen an originator issue a lot of debt instruments based on receivables that actually didn't exist. So that's one. We call it asset verification. So making sure that the receivable actually exists, or the invoice or the loan actually exists. Then two, sort of double booking, assigning receivables to multiple lenders. That's also what happened here. And then three, not tracking covenants, not tracking liquidity pools, not tracking portfolio exposures. That's also what we automate. And of course, it's impossible to take out the risk entirely. But a lot of the public cases we've seen were pretty straightforward in some cases. And we do bring a lot of value by making sure no receivable is pledged to different lenders, making sure covenants are tracked in real time and not only once a quarter or once a month, but really every day, every minute. And by verifying assets in a smarter way, not only looking at a invoice, a PDF, but also looking at bank accounts, reconciliation of payments, and additional securities checks that we are implementing.
Okay, interesting. That brings me to my next question. Is Credibur relevant for both retail and institutional investors?
So on the investor side, so far, we are not dealing with retail investors directly, because typically these private credit or these larger portfolio-based loans are not directly available to retail investors for a good reason, right? Because they are fairly sophisticated. Now, of course, First Brands, good example. A lot of the exposure was with UBS, but not on their balance sheet, but in funds. And then, of course, you do have investors into those debt funds. But those are not traditional retail investors, but typically high net worth individuals or institutionals. That might change to some degree with LTIF now. We do see more interest in private credit investments also on the retail side. But then I would say it's even more important that providers like us or competitors are used to reduce risk and have real-time insights in the portfolio, because the more you attract retail investors, the better you need to make sure that the default really is not happening on the fund level.
Okay. Let's talk about the technical perspective as well. How do you integrate your solution into your customers' technical landscape, IT landscape?
Yeah, depends a bit on the level of maturity of the customer. The main integration we need is on the fintech lender side in our example. And then these players know their tech, right? So we have modern APIs that they can integrate with, and that's rarely really a bottleneck for them. We are just integrating with one from France where it's literally for them like a few hours of work. But then again, when you work with more established lenders, debt investors, so lenders on the other side, they often are not able to do that. They don't have technology. So then we really help them and also integrate into their more legacy systems, or even just give them access as a human to receive data, look at portfolios and download Excel spreadsheets if they need that for their own work.
And do you work with standard configurations?
Yeah, we do have a standard configuration, and we have a data model that's very close to the European securitization standard. So we are fairly European in our approach, but there is a fair amount of extension and customization as well. And I mean, to be honest, we are also quite early in the journey, right? We are a young company. We are building out our model as we go. We are excited about every new asset class. We have already a quite nice reach of stuff from buy now, pay later, SME factoring receivables, but also income share agreements, for example, from students, which are fairly esoteric, to a lot of renewable energy assets, so solar panels, heat pumps, that require quite different data points. But now the French player I just mentioned, they, for example, lease bikes. So now we are also tracking bike data, which we didn't previously, but for us, it's fairly easy to extend that.
Okay. And how do you address the issue of data protection and cybersecurity?
Yeah, that's a huge thing for us. And we have a few competitors, 1, 2, that are maybe even more modern than us, that are building this on blockchain technology and very advanced. I have to say we are a bit boring. We build bank-grade boring software that's DORA compliant. We are going through the ISO certification process right now. We are fully compliant with GDPR. Spend a lot of time with our cybersecurity experts and lawyers. So it's fairly boring software. But I guess that's also me because I come from bank background. I always build bank software. So better boring, but safe and reliable, and something that you can also show to any regulator.
Okay. Talking about data brings me necessarily to FIDA, the Draft Financial Information Data Access Regulation. And let's have a look on this subject matter too, please. Does this offer any additional innovation potential here for you guys, if at all?
I don't really see it so far. Interesting if you see any angles. To be honest, what we are still more making use of is bank account access. So still the benefits of PSD2, which, to be honest, haven't reached the depth of every single bank in Europe. So still a way to go. I find FIDA super interesting, but for completely different use cases, really more insurance, for example, not really for our business model.
Yeah, my idea would have been that a regulated investor, such as a regulated fund, for instance, would start investment processes with regulated fintech lenders according to ECSPR or AIFMD as well, or MiFID, whatever. So in that case, both would fall into the draft scope of FIDA. And against this backdrop, the question is if there is any kind of angle you could hinge on with your business model.
That is actually super interesting. Might be. Need to look into that a bit. We haven't received any specific requests, but it's definitely worthwhile figuring that out. We do see right now the underwriting process on the originator or on the fund in these large transactions being mostly manual. And it might be an interesting angle there. But then again, this is like so far away from how it currently happens, where you exchange individual documents and Excel spreadsheets. We do provide portfolio insights. For example, when we help fund managers interact with debt investors, LPs, where our basic spreadsheets and analytics and dashboards already provide a lot of value. But indeed, FIDA might bring more dynamic into that market.
Mm-hmm. Okay, great. Nicolas, you have just managed to close your last funding round. And is there any next funding round scheduled? What can you tell us about this?
Yeah, maybe I'm overcorrecting a bit. In my last startup, we raised so much capital and we also burned a lot of it by growing too quickly. So we are following a bit more conservative approach. Our investors are fairly conservative. They are all from the lending space. So our lead investors was the fund filled by the German community banks. Then we have a Japanese asset manager and a quite traditional Japanese-Canadian investor. So, and then with the funding, we are also good. We can reach profitability. We are funded for the next years. We might at some point take in additional investment when it makes sense strategically. So we are talking to larger asset managers from the States, for example. That could be interesting, but we don't need the money. So I'd rather stay lean and humble with the small team and build really good software and not go into overdrive and splurge on fancy offices.
Okay, great. Sounds great. And my very last question for today on Credibur. How many customers have you already won, if you can say so? Just to get an impression.
I always say a handful, and we haven't released figures yet. Yeah, it's a handful, but we are winning new ones every day. The challenge, I must say, is always the go live, right? So sign customers, quite a lot actually, but then it takes a while to close the debt facility, and we typically go live with the new debt facility. It's not very common to change your reporting solution or calculation agent or backup servicer. We also provide backup servicing in the middle of a facility. So expect great announcements over the next month and years, I would say.
Okay. Yeah, thank you for all the details so far. Let's conclude by briefly discussing the fintech ecosystem in general. And just for the audience, Nicolas is really a very relevant figure in the fintech ecosystem. He is not only a founder, or to better say, he has not founded repeatedly only, but also he is very active at the regulatory level and at the lobbying level as well, with one of the major associations in Germany. And against this backdrop, the following question is really relevant, and it's really good to hear your answer on this. How do you see developments in recent years in Europe, and which trends will have a particular impact in 2026 and beyond? I ask this question because November is almost over, and so December is rising. So what's your take on this?
So obviously a lot of small items that are ongoing. CCD2, we touched the new AML regulation that's being discussed now. A lot of small things happening. I think on the more macro level in Europe as a whole, we are more and more driven by sovereignty discussions and taking that real seriously. And I think, and I can't even fathom how much impact that will really have. It depends a lot on geopolitics, right? But in the current climate, and if nothing really dramatically changes, and the war in Ukraine being finally over, or Mr. Trump suddenly changing his mind, that will continue for a while. And I think we really haven't found good answers to sovereignty on technical infrastructure, for example, on payment issuance and acceptance. And I'm still waiting for the big disruptors to come that would bring, for example, a alternative to the established schemes in the form of stablecoin, for example. Super interesting topic that is seeing a lot of coverage now. So I think sovereignty would be my answer here.
Okay. Yeah, great. That's the end of today's show. Thank you very much, Nicolas, for your time. It's been a pleasure talking with you.
Thank you, Constantin, for the invitation, and excited to be part of Digital Lending Association.
That's great. Thank you. Yeah, thank you everyone for listening. I hope you have enjoyed this episode as well. Please make sure you subscribe to our podcast so that you will never miss our show. Stay safe and sound, and see you soon.